Welcome back to the program. My name is Kerry Stevenson, and today I'm delighted that I have managed to snatch some attention from Mr. Frank Holmes. He is the CEO and Chief Investment Officer of US Global Funds. Welcome to the program, Frank. Thank you so much for your time. I know how busy it is.
It's lovely to be with you.
All the way from San Antonio, Texas. Let's start, Frank, with a little bit about your background and why you have such a focus on the gold sector, or the precious metals, I guess.
You know, growing up in Canada, I've been living in Texas for 30 years. So I like to say I'm a Tex-can. Y'all come back, eh?
Love it.
But growing up in Canada, like in Australia, it's a very different culture in the world. And we took up geography and geology. I think my first field trip was when I was 12 years old. That you had to learn about Silurian, Devonian, Ordovician seas and how they created energy deposits and etc. So it's in your blood. And I remember so often going to Africa and Latin America, and you'd go out into the bush, and who would you meet? Geos from Canada or Australia. I mean, it seemed to dominate in Latin America, Australians and Canadians, and same thing with Africa. And I always got a chuckle out of that. And a lot of the mining engineers seem to come from South Africa itself, but the geos, the adventuresome ones, were from our two great countries.
Yep.
So with that, I share with you, I was very fortunate to be originally like what they call a quant analyst today. And then I went into building gold models or trading gold stocks when there used to be professional trading. And that was in Toronto. And that's where I really started. My first and really unexpected deal was, think of it, called Franco, Nevada, which became a royalty company. So I was very blessed to be mentored by wonderful thought leaders like Seymour Schulich and Pierre Lassonde and Ned Goodman. And they were sort of my friends that I grew up with. And then Peter Fendersbay from Australia, I did financings for him. So that's where really the growth took place. And so I wrote a book on gold investing, the Gold Watcher, and how to look for patterns of interest and how markets flow. And then I moved to Texas 30 years ago and bought an investment advisory firm, which started the first no-low gold fund. And that's been my journey for the past 30 years, financing the creation, the ground floor of creating Silver Wheaton, which became Wheaton Resources, which is the second largest royalty company in the world. Franco, Nevada, when it went public again after being bought out, merged with Newmont, then spun out in 2008. So I've been very much involved in the creation of gold mining companies.
Well, we're going to talk about gold mining companies, but it's an auspicious day to be speaking with you right now, because overnight, not only did gold hit the US dollar 2000 mark, and you've been calling that for a while now. And in fact, recently you're calling for $4,000 gold. Well, we'll get into that as well. But so I guess generalist investors are all of a sudden waking up and saying, wow, let me get into gold. Now, they don't know much about it. And you talked just before that you're a quant analyst and you look at charts, etc. Do you think it's a little bit overheated at the moment? And, people, stop panicking, people. What advice would you give to those people that really are getting into looking at putting their fiat currency into real money, gold and silver, right now?
Well, we're in a very different world in respect that capital markets, there's so much of social government movement around that's never happened before. And I really believe it's currency debasement. I saw that at the beginning 20 years ago, and what a lot of people don't realize, in the past 20 years, 80% of the years, gold has been up. Yeah. Gold is more than 3 times outperformance of the S&P 500. Gold stocks had a spectacular run from 2002 to 2007, and then they started doing these mergers that were destroying value. That is the reserves, cash flow, revenue per share. They got bigger, but not on a per share basis. And the capital markets only reward per share growth.
Yeah.
So if someone's going to go and invest today, they must really be sensitive over the metrics on a per share basis. Merger, same thing. What will the ending entity look like? If the revenue doesn't rise on a per share basis and the cash flow doesn't rise on a per share basis, get out, because that's value destruction. And what happened from 2009, that period, going from 800 to 1900, and then it fell, and now it's gone back up. So there are two driving forces to this world of gold in government. We believe that government policies are a precursor to change. And government policies is a binary model. It's monetary or fiscal. Monetary is actually binary also. It is money supply. Are you debasing the currency or not? And it's real interest rates. Fiscal policy is tax. Regulation is another form of tax, and spending of money. Where's the money going? And when you get a widespread, and so in government policymakers, solutions to issues, then gold starts to take on its own sort of unique animal as a fear investment. And what we have now globally is really a widespread income inequality from the top 10% to the bottom 10%, bottom top to bottom. When that spread is wide, there has to be solutions. It's not just tax the rich for the poor. No, there has to be a better just policy with that. And the governments are so wide themselves in their policies that they don't have a solution to it. And this creates sort of this drama where this is my opinion that I see around the world. And what you're seeing also is the G20 finance ministers were consumed in the year 2000 with global trade. And after the crisis of 2008-9, they became consumed with synchronized tax and regulation. And now we have World War III.
Yeah.
And World War III is invisible. And this pandemic, this coronavirus, is invisible. And the G20 finance ministers and central bankers are used to working together. And so they now have a cartel. And so that cartel is about synchronized money, currency debasement, but it's what they have to do. We're at war. And when you go look at any time there's war, gold is an important fear asset class. And since this is so different that we have negative to zero interest rates, and we have governments printing money and saying, hey, no one's going to buy it, we'll just buy it. And they go out and buy their own stocks.
Yeah.
So Japan now owns 15% of their stock market with ETFs. We see this in Switzerland as in the top 10 shareholder, the Federal Reserve of Switzerland, of Apple. And that's brilliant. Float money, no coupon, buy something with dividend growth.
Yeah.
Very, very big game changer. What I could see is that in buying gold stocks, because gold stocks, and some of them in particular, have free cash flow. And we're in a cycle, this secular bull market is now over 18 months. This started in January of 2019. If you're tracking it, where the golden cross with a 50-day moving average went above the 200-day, and even though gold's had some big downdrafts, it's still, that trend has been in place. And so you have hungry governments looking for yield, just like retired investors are looking for it.
Yeah.
And so what we also saw in the S&P and also in Australia and we saw in Canada is that most of the stocks in the S&P had a free cash flow yield. That is the ability to expand or pay dividends or buy back stock. That got wiped out with the coronavirus. But gold stocks, for the first time in the past decade, there are 100 stocks we follow globally that produce gold, their free cash flow yield went positive. The median went positive. It wasn't positive a year ago. It wasn't positive in December, but in March it was. And so you're seeing that generalists all of a sudden buying gold stocks that are agnostic to the gold thesis of currency debasement. They're just looking for it. And as the stock market itself keeps levitating because we're at zero interest rates, we have central banks buying stocks and gold, I'm sure gold stocks. And that is the big paradigm shift on this formation of capital. And we've seen in the particular in America weaponize COVID-19. That whatever Trump says is wrong. If he says anything, it's got to be wrong. He didn't do enough at the beginning, then he talked too much. It's just bizarre. And then vice versa, it's happening in other countries. So it's been weaponized. And that only creates more fear and more money printing.
Well, I call it, Frank, I call it the magic money machine at the moment because, you know, if you or I did it, it'd be called fraud. But the central banks can just whip out this magic money machine and debase the currency. I say it all the time. This is going to continue to go on, and currency debasement will continue to go on. How do people protect their wealth? And right now, sitting here in Australia, we're in a really difficult situation. There's a lot of unemployment. It's only going to get worse. And I guess I'd love your views on the US dollar seems to be losing some value at the moment. What do people do to protect their wealth? Because as you say, this is a World War III. It's a silent World War III, and it's very confusing for people.
Well, you know, there's some great winners in the stock market, as we see in the Amazons, and I think one of the big things to look for is that hiring people. So in America, Chipotle has the best takeout service, and they just announced they're going to hire 10,000 people. Now, most restaurants are going bankrupt, but they're hiring because they've created a system and a process for food delivery to people that want to stay at home. Amazon, you know, one of the best performing stocks in this quarter. Well, why? They hired 100,000 people. They stopped all, they were really brilliant because they said, no overtime working. We're just going to hire more people because we see all these layoffs, and they looked as a great company, which they are. So Home Depot, now I don't know the name of the Home Depot or Lowe's in Australia, but what I'm seeing, I'm at home more often. I see this, I got to renovate this. There's more money being spent on renovation.
Yeah.
And those workers working outside are allowed to keep working here. And so you see the Home Depot as a stock doing exceptionally well. You see the Amazon. So who has the mechanism to deliver food or product, or you can drive by and pick it up? They're going to be the winners in this sort of cycle that we're going through. And the gold stocks. I think there's no doubt that gold stocks are going to be important. So real estate, I just saw in San Antonio last week that our real estate housing is up 17% over the last month.
Wow. That's interesting, because I would have thought it'd be, you know, if people are losing their jobs and income, that real estate would be one of the things that would go the other way. And certainly there are signs here in Australia that
mortgages have come down. Mortgages have come down. It's so cheap here. I don't know about the rules in Australia, but in Canada it's the same thing. Talking to friends in Toronto, they told me that Toronto property was for $3 million and it went for $4 million, a bidding contest.
Yeah.
And so, wow, like who would think that in this type of environment? But real estate for homes, like it's a real asset, it's going up in value. And there's lots of construction taking place for home renovations in value because people are forced to stay home. So I think that's what you want to be taking a look at with the opportunities. Now, gold is just like real estate. It's a real asset. And the other big part is when you look at China and India, which 30 years ago only consumed 10% of the world's gold, their GDP per capita and purchasing power parity has risen so great that they're up with, China is now up with America and India, the three of them. So they're now consuming, if you look at data points, 53% of all gold, and that's the love trade.
Yeah, I was going to ask you about the love trade. Why do you call it the love? I love this. You call it the love trade. Tell me about that. Frank, I love this.
The love trade, what I notice is that's just jewelry. If you love your country, then the country's central bank should own gold. What did Churchill do to be able to fight Hitler? He had to get his gold out of the UK and got it to Canada. And there's a famous story of how they got it to Canada, then they got it to Ottawa, and then America said, we can't take any more British pounds notes. We have to take your gold. So the gold came from Canada to the US, and then the US government lent them the money to turn around to make boats and tanks and ships and planes. So you can see that when Korea stumbled in 1997, when you had the Asian crisis, currency crisis, everyone for their country was asked to bring in the gold, and they brought in billions of dollars of gold, and the government didn't lose face, and they were able to pay off their debts with gold.
Wow.
So you see that in India, they've seen so many dynasties come and go and corrupt governments, etc., that the women in India wear more gold that's in Fort Knox.
Is that right?
It protects them. You were talking about 8 tons versus 22 tons, some big number difference. So it's important to recognize that in Vietnam, which is much closer to Australia, the boat people that first got out had gold. They had a gold gram called a gold tail. That's how they were able to pay to get out. That's how your family got out.
Yeah.
Those in Syria, women couldn't go to the hospital, and the only way they could pay for it was with gold. Those are first to get out of Syria had gold. That's the facility. So if you love your family, you make sure it has gold. And then for love, for Valentine's Day, for birthdays, for anniversary days, etc., there's this cultural affinity for China, India, and Southeast Asia, and the Middle East to give gold for graduation.
Yeah.
And it's recognized as so the correlation, the math says that as their GDP per capita is rising, they're actually a bigger part of the consumption pie of gold.
Frank, you mentioned earlier real assets and the rising value of real assets. Do you put that down to currency debasement? In other words, all the central banks are printing. The magic money printers are going 24/7. The liquidity has to go somewhere. It's going into real asset. Do you see that's the reason for property and gold and silver and all this, the other, because currencies are losing value hand over fist. So don't have your money in the bank, put it into real assets.
So you know how smart you think of the Swiss? You're buying Apple, a great corporation, but the dividend is greater than they can borrow money for. It's a positive real return for them.
Yeah.
And it's just becoming cognizant of what is going on. At zero interest rates, gold's extremely attractive at zero interest rates. Yeah. And I like to point out that the greatest investor ever is Warren Buffett, but he's underperformed Franco Nevada over the past decade and 5 years by a long shot. And bullion's outperformed him for 20 years and has outperformed him year to date. And so gold is really outperforming a lot of negative talking heads on gold as an asset class. So I think we have to take a look at the largest hedge fund in the world, Ray Dalio. You know, Ray Dalio is a true gold advocate, and he believes in this parity trade, and gold should be between 10% and 20% of a portfolio, and depends upon the stress between monetary and fiscal policies. And he's been able to grow his fund group up to $160 billion. And so even though he's a great advocate as gold as an asset class and says cash is trash, it's really a 2% tax on your money, but it appears safe because it's not volatile. But the debasement of the currency is what's like fool's gold. It's fool's paper, so you should be invested. The smarter central bankers, you're seeing more and more central bankers buying gold and those buying stocks. What has America done to get? So what happened when they first dropped rates is the banks wouldn't lend out money during COVID. So they turned around and said, okay, we're going to buy ETFs. So all of a sudden, $54 billion goes into muni ETFs. And then the Federal Reserve goes into corporate bonds, forcing corporate bond yields down so the debt rollover could take place. They cannot buy directly shares by charter, but they can buy ETFs. So that's how the Federal Reserve has gotten around, I guess, this mechanism. So the whole world, as we knew it, when Greenspan left, the Federal Reserve was only 6% of the economy. It's now over 30%. And when you have a central banker, Powell, say they're going to progressively and forcefully and aggressively spend money, that's a telling sign. So it's go gold.
Well, it's go gold, but let me take you back one step. You mentioned Franco Nevada. Now, for our listeners out there, Franco Nevada is a streaming royalty company. Can you just let our listeners know, why do you like Franco Nevada right now? And there are other streaming companies out there, but that model, what is it that you look at that model from an investor's point of view and you say that is a good way to invest?
So we launched a kind of fundamental approach, an ETF 3 years ago called GoAu, Go Gold, on the New York Stock Exchange. And when we created this animal, it's very quant driven, recalibrates every quarter. And out of those names, 30% are the three biggest royalty companies: Franco Nevada, Wheaton River, and Royal Gold. Royal Gold is based in Denver, Wheaton is based in Vancouver, and Franco Nevada is based in Toronto. Franco Nevada was the first to create this model, and the real genius behind that concept was Seymour Schulich, because he made a lot of money buying oil royalties, and he said to his partner, Pierre Lassonde, he said, Pierre, can we get gold royalties? And so they bought their first royalty, and I'll give you sort of simply, they said, what is the value of buying 2 million ounces of gold in the ground? And it's a royalty on a property that Barrick and Newmont own. All right, those 2 million ounces are worth, say, $10 million. So they bought that. Those 2 million ounces produced 20 million ounces.
Right.
They got the 18 million free. All the other discoveries on top of that over the past 30 years, free.
Free.
So they usually do a model to get their money back after 10 years. And after that, they understand the geology, etc. Usually these deposits last longer. So also when they do a royalty on a junior mining company, it's like a good housekeeping seal. Some say, oh, they're taking away the revenue cash. It's not true. Before they take that risk, they have de-risked that investment for me as a money manager.
Yeah.
And the other part is, would you rather buy Barrick or Newmont, which the average revenue per employee is $600,000. Franco Nevada, which has a royalty on their assets, it's 24 million revenue per employee.
Wow.
Goldman Sachs is $1 million. So we're talking about, really high intellectual capital that's behind the Franco Nevada type of model. And it's very much like what they call a SaaS model. And in a SaaS model is this recurring revenue. Microsoft went to it, and all of a sudden they grew to having over $100 billion in cash. And classic would be the cloud, and the cloud has sort of totally changed the internet. And with that, when you have a cloud contract and do things in the cloud, it's a monthly recurring revenue. The royalty companies are the same way. So as a gold asset, their revenue is less volatile, their cash flow is less volatile.
Yeah.
And generalists like Ray Dalio like that, and they're the ones that pay a higher value, and they'll pay a higher multiple for that lack of volatility. And they have hundreds of assets. They're not at risk with one country or one deposit. And it was Wheaton that innovated the idea of what's called streaming. And streaming is another mechanism that's more tax efficient. And now we're seeing there's a pharma company that was listed in New York, and I think their revenue is $1.5 billion, and they have 70% gross profit margins. So most gold mining stocks have gross margins of, let's say, 20%. That's a very healthy number for gold mining stocks. All right, Franco's 60.
Wow. Okay.
So they're like a technology company. So high gross margins. They have revenue of, say, 600 million. All their G&A is 50 million. That's $550 million to buy more royalties, make investments. So it's a phenomenal mechanism. So for my GoAu is 30%, and those three names, I don't know each year who's going to be the winner, but I just recalibrate them. The other names are based on revenue growth. So the last quarter has to be above the 4-quarter average. The cash flow has to be for the last quarter above the 4-quarter average. That's momentum in growth. I don't care about future production because they're never right when they forecast it. I just rather play the Newton's law of inertia, that when it's in place, then odds are your favor, it's sustainable. And so we also found that buying those stocks that have the highest cash flow return on invested capital, they're better managers, better discipline of capital. And then now it's only 25 names. Like, you can outperform the GDXJ. Our back testing said 92% of the time on a rolling 12-month basis. So for any investor that's looking at this space, I've always advocated the 10% golden rule. I have 10%. And if you've never been invested, start with 2% tomorrow, but look at any type of correction to add to your position. But you should have 10%, and because the math suggests this for so many reasons, and rebalance. Rebalance like I do once a quarter, or rebalance once a year. And you would have overall helped your fund performance, your diversified portfolio.
Yeah. Okay. I just want to go back very briefly, Frank, because you did touch on your fund and explain a little bit about the fund. It's called the GoAu ETF
Right.
fund. Is that correct? I just want to make
Correct.
it clear for people. And can people invest in that fund at the moment? I mean,
I believe so. Like it's listed on the New York Stock Exchange, like BHP is.
okay?
Anyone can buy it.
Okay. And when did you launch that? A couple of years ago, was it?
3 years ago.
3 years ago. Okay,
To
cool.
give you an idea, from the lows in March, gold surged 40% and GoAu surged 80%.
Goodness me. So
So
why would you say that the GoAu is unique? What's unique about your ETF fund?
because the number of names is much smaller than any other index.
Okay.
Other indexes are all just about market cap, so money going into them can buy a bad stock with a good stock. It's just market cap weighted. This is high grading it at all times. And there's a discipline with it that's back tested rigorously. And it's agnostic to the story that I love this country, I love this deposit. No. Can they deliver revenue last quarter above 4 quarters and cash flow last quarter above 4 quarters, and be in the top half of cash flow returns on capital and be in the top half of profit margins?
I have to ask this for my investor friends out there. Do you pay a dividend? Does GoAu pay a dividend?
Yes.
Oh, excellent. All right. Well, you heard it here first, ladies and gentlemen. That's the GoAu ETF fund listed on the New York Stock Exchange by Frank Holmes, and he keeps a very tight, close watch on it. Frank, I want to ask you one final question. You recently said that, in your view, gold would go to $4,000. I mean, you called 2,000 a few years ago. You said gold would easily go to 2,000. You're now calling 4,000. Given that gold's recent run up, are you still calling gold 4,000, or are you more bullish?
No, I think it's just it's a rational thought process. When we look at what happened in 2008-9, because it was a global financial crisis of over leverage and bad loans, and that unwinding, there was a couple things that really happened, but the bigger part was the Federal Reserve expanded their balance sheet like other central banks, but they took the lead by $3 trillion. So when you look at that sort of thought process, you say, okay, the magnitude of this complete shutdown is going to cost the US $10 trillion. The EU is going to be the same. Japan is already, Australia, China. This is going to be unprecedented currency debasement, but it's done globally. And so I think from that end, when I looked at gold went from 7,800 to 1,900, then why couldn't it go, if based on the expansion so far, it forecast gold 4,000 in 3 years. And I try to remind people that when Greenspan, they said, had too much debt, he was 6% of the US GDP when he left, and that was criticized. He was criticized for that. And today, Powell is over 30% of the GDP. So I think that it's pretty rational to see it go to 4,000. Now, 10 years, I think it's 10,000.
Oh, wow. Okay. All right. So it's that sort of, as the currency keeps being debased, gold holds its own.
And the same thing, look at in Australian dollars, how well gold has done.
Yeah.
I mean, and the same thing in Canada.
Well, around the world, gold in terms of our currencies is doing better than it ever has. And it's been interesting because it's only, we go back to 2011, gold was at 1,900 US dollars. It's only just recently hit that back again. So I guess it could travel even further.
It could.
Frank, I want to move on to another area where you have an interest, and that is cryptocurrency, because that's getting a lot of attention. There's a very small portion of the market that truly understands that. Now, I know that you have some interest in cryptocurrency. I'd love to hear your views on Bitcoin. There's lots of other things out there. There's confusion, but also some of the mainstream, some of the banks are looking at cryptocurrency. Visa and MasterCard are looking at being able to use cryptocurrency by using their cards. It's a changing world. What are your views, Frank Holmes?
Well, I'm the executive chairman of the first public company to mine Ethereum and Bitcoin on an industrial scale and only using green energy. And so I was proud to go into that, learn in that business, and it's a very unique world, but it's growing. And to give you back for all your listeners, had all the credit default swaps in 2007 and 8 been on a blockchain disclosure, an open, transparent way of looking at the numbers, it would have been easy for the Federal Reserve not to let Bear Stearns or Lehman Brothers go bankrupt, because they could actually quickly quantify the risk. They couldn't quantify, they panicked, and the number that was thrown around was so much greater for Lehman Brothers. But now when they look back at it, it could have been wrote a check for, here's $5 billion and it's over. Not this global crisis that they took. So blockchains are very valuable, and Bitcoin proved that you could do a transaction every 10 minutes and you could trade 24/7 and you could have this transparency. Now you don't know if the trade is between you and I, and that's what the regulators don't like. But you can see it came from Australia and went to Texas. You can't see that it was between us. So I was trying to launch an ETF in the space, and I quickly realized that $1,000 an hour legal bills, the SEC and the Canadian Securities Commissions weren't going to allow something like this to go through because of AML concerns, anti-money laundering law concerns. And what I liked about the crypto mining was I don't have an AML problem. Why? Because when you validate this transaction every 10 minutes when it comes to Bitcoin, you get paid new Bitcoins. They're called virgin coins or Genesis coins. They've never been touched. No Darth Vader has touched those coins, so they're clean. And I would never be subject to that regulatory concern. So that allowed me to, so I put up my money and my time into building Hive. But it's been a roller coaster. Hive has become the most liquid name in the world as a blockchain mining company. Hive trades over the counter, US trades in Canada and Germany. And we're growing. We in fact bought a facility in Quebec during COVID. And our big bet has been on Ethereum, because Ethereum is what's called a smart contract.
Yeah.
And what we have found is that there's a big audience of gold investors that didn't trust going to one of these crypto exchanges to buy a Bitcoin, but they've used Hive as a proxy. And then we see that quant funds are using it as a proxy. So we see, like gold stocks, gold goes up, all the gold stocks trade up, gold goes down, they all trade down. Ethereum's up, Hive is up. Bitcoin is up, Hive is, Bitcoin's down. Most of the time, our volatility is correlated 92% of the time with the direction of Bitcoin and Ethereum. So we become like a gold stock now. And we become a proxy for those who do not want to take the risk. They just want to buy a stock that plays a role. But I always remind people every quarter we do our presentation to the shareholders that what is the DNA of volatility? And it's interesting because the DNA of volatility on gold on a daily basis means that it's a non-event for gold to go up or down 1%. That means 70% of the time, one standard deviation, this is the normal movement of gold.
Right.
The S&P is the same. They always say gold is more volatile than S&P, hogwash. They're the same. And what's also interesting, but gold stocks are 3%. So it's a non-event for gold stocks to go up 3% if gold goes up 1%, fall 3% if gold goes down 1%. Bitcoin and Ethereum is 5%.
Right.
So you have to, because it's a new market, it's a new world, that you have to recognize that. And what happened to that bull cycle peaked when they came with the futures market. It crashed everything. And what we saw was that JP Morgan kept knocking and knocking and knocking. Crypto is bad, cryptos are bad, until February 2019 when they launched their crypto stable currency and they stopped bad-mouthing it, and that was the bottom in Bitcoin. And then 4 months later, Facebook came out with Libra, and Bitcoin started levitated to 14,000. All the banks went after Facebook. It fell back down to 6,000, 4,000, and now it's basically back over 10,000, pushing 11,000 range. So I think the worst is over. It was a 14-month winter. Every year I go to Harvard for a week of being a student with 180 other CEOs from around the world, and we stay in dorms, we study cases. And it's interesting for me was 3 years ago, there was maybe one case on blockchain. 2 years ago, it was about 10% of the program. And this year, it was something like 25% of the program was crypto and blockchain. So there is something happening. The banks are slowly wrestling with it. I think there's a greater gravitation towards Ethereum because it's a smart contract for many reasons. And many of these other countries' currencies are looking at that algorithm.
Frank Holmes, what a fabulous time to chat with you when all of these things are happening. Any final comments for my listeners out there that are just going, what is going on? Do you say Highlander Gold, or do you look at gold stocks? Do you look at ETFs? Do you go to the GoAu fund? What would you say as your final comments to all those people that are going to be listening to you today?
Cash is trash. Don't be fooled because it has no volatility. And make sure you're looking at stocks that have the capacity and the discipline to pay dividends rising. And that's where your money should go. Who survives this coronavirus so far? Look at those names. Gold stocks certainly have prospered, and they will continue to prosper with that end of it. And so if you're not long, you're wrong.
Wow. What a great way to end this conversation. Frank Holmes, it's been an absolute delight to speak with you today. I hope we'll speak to you again in the near future. Thanks for joining us.
Happy investing, y'all.